Okay. All right. So this week has been good. EU wise, I'll tell you the trades that I took, the outlook that I had, the potentials I missed, and also the loss that I took also. So we start here. For the beginning. Alright, so some people might look into a opportunity when this happens. And then move from there. I do believe I did that, but didn't see any opportunities, so work our way down. So with me, I was waiting to see what's going to happen with the first instant of PDRA on the 4 hour. So one thing I did see, this is a low, market went up, keep it down, stopped here, then the market took out this low. So one could think that for the somewhat moment that a bias could be to the upside, even though usually I pay attention to this leg usually, but because the market didn't reach here and also wicked at this relative equal lows, so one could consider this as somewhat, I won't say valid, but gives you a reason to potentially look for buys. So me seeing that targets could be the midpoint of this fair value gap and here also, and then potentially here. But me personally, I would have gone midpoint here, and because this up close candle is so close to the midpoint on the daily, could have potentially put one here. But let's say, you saw this, you saw the general liquidity, took it out, those equal bills, and let's say you've done that. You eyeballed it, and you think, you know what? I do think it's gotta be my time. So then one could bring out the fibs, and because the reason I'm doing it here is because this push violated here. And then now we can look to see what is the first PD array that could potentially wipe out. And I do say the market should hold, take, hold. That's if a continuation. And then for reversal, it should do take, take, hold. So it could take liquidity, then cut through a PD array. When it does that, it's due to hold. It's nothing's guaranteed, but it's due to hold. So from me understanding that, what can we expect? So the market took this. So let's see. This is not PD array, but it is considered the real structure, support and resistance. But we don't consider that as a PD array. Well, I don't. So fair value gap is a PD array. So I'm not gonna take this out. But no fair value gap. Even if you could say, okay, here it's a PD array, but it doesn't show not much momentum. You could say here, then the lowest point of the down movement, the down expansion, is my order block. So right here, you can consider that order block. If that was your thing, like you got equal lows here, that's your thing. But you would have got connected here, and then she was to consider this leg, or even this leg, to be your expansion, and this could be a potential PD array to get taken before you're looking to enter. I believe that was a double top. This is a double top. Yeah, so let's say this was a double top, and then when this takes place, and the market goes above here, look to enter. So market did not go above here, it came back down, respecting the down close candles. Also this one as well, down close. If you went in a lower time frame, you probably could have seen an opportunity within this to have the push. I did do that on a trade, but it just wasn't this trade. This is something I didn't get myself into, but still, it's just sharpening my blade. But see right here, this is the leg that pushed up. Nice. What I do, 3 to 1, 1 to 3, I would class that as an order block. So could have potentially got here, but if you're feeling a bit, you know, not believing what one could do, if you want to enter in there, even though broke above, double top, create a fair value gap, but she didn't want to, I think that was not a clear sign. Oh. There wasn't much here in that respect on the 5 minute, but this would have been a prime opportunity to get in. Starts below this low, but and remember, we're not looking to break records with this. It's just a quick from the 4 hour and the daily, you know where to get in, where to get out, where to assume that the market, or your predictions, where you're predicting the market to pause or to even draw to some extent. Fair value gap, and then the lower time fair value gap was the 4 hour, and then you have the daily also. So you had two fair value gaps. Once you have that, then go ahead, commit to entering the trade, and you know where your take profits are. So yeah, this instance, even if, okay, let's see. Okay, so 4. Is it 4? Okay, 4, so 7. So I run my orders. There's a little fair value gap, nothing major, but still the order flow is bullish. So one could have got in here, but I'll take it to, not to the sky, but take it to somewhere decent. Some people would have got scared here and it's taking out me personally if I show the lack of interest to go up to here, take place, cutting my trade some. I won't be doing all of it, but some. So that's what took place. Potential sharpening my blade on EU for the buys. Yeah. So that's this interest here. And then having an interest of when the market went to here, which is the daily. So the market has done a couple things. Went to the 4 hour and also went to the midpoint of the fair value gap on the daily. So what we'll do, bring out this bad boy, go to the 4 hour, and just let's see what the market has done, looking to do, and all those good stuff. So this one could be a bit confusing. It did confuse me, I can't lie. I was a bit hesitant with this one. So because I saw the daily midpoint the market went up here, but then on the 4 hour it went here. This way it gets a bit techie, but then it might have gone here, but then on the same 4 hour time frame, it doesn't do much. Yeah. So because it went from the daily to the 4 hour, one can use the fibs as you see here with the yellow. Use the fibs. The point of interest is the up close candle. For the up close candle, we're looking for a possible PDRE to get violated, which is below this yellow line. As I told you a couple videos ago, the down close candles are not PDA rates. So what I'll be looking for is lows, fair value gaps, order blocks to be taken out. So I see here this leg is a leg to pay attention to, because it's just like a straight drive up. See, like the down close candles didn't get respected, then go back down to it. Some people might consider that order block. So this level I will cast this as a key low because it's in a fair value gap. So this has my point of interest. This is where I can look to for maybe a momentum shift. And it did take place, but it wicked. So you'd be thinking, okay, cool, it wicked there. That's that simple. That's it. It wicked there. But what we should be able to see is, remember, if the market does take hold, then that's kind of like going counter to the narrative. And remember, the narrative is meant to be to the upside, because remember, it whipped here. So we're looking for the narrative to continue. So if the narrative was to look at that fair value gap. It should take care, grab the momentum of that low, continue high, maybe a displacement, but it didn't. So some sort of alarms should be ringing off, and spotting or seeing the evidence of the potential flip to take place. So, like I stated previously, fair value gap, I do consider down close candles as a potential point of interest, not a PDA rate, but a point of interest. But if I see the market that completely takes certain things out, then I'll be like, okay, cool, this is what's going to take place. So when I saw the market hold on the 15-minute fair value gap, 15-minute up close candle, my spider senses were tingling. So once I see that, use the fib, make sure I get something under the 25%, which was fair value gap. The market held on the 15, it took the fair value gap, created relative equal low, returned, held, and then took the relative equal lows, and then did the same thing again. Tried to get into here, but didn't get into it. I overlooked one simple thing, and it was the setting up of here. If I knew that, I knew it, but not at the moment. I knew it afterwards, because I was a bit rushed that day, like Tuesday 31st December, New Year's Eve. It was a busy day, so my full focus was on the charts. So I overlooked it, and then when I looked into it, stuff does happen. So then, let's clean this up. You saw, let's go. So you saw 3.66 plus 6.5, let's say, then plus 12.15. That's 22.31%. Yeah? And me, I'm a bit savage when it comes to my my money management. So let's see what I do is every position. I have 3 positions. Every position is 271. I mean 278. So let's go. $278 times yeah. Let's do that. 278 times 6.5. And 278 times yeah. So then we add all these up. So just from that move I just showed you, it's got the potential to do that. To me, they're just numbers. This has the potential to do that. They can have the opinion about ICT, but look how much. All of that in total, 22.31%. Do I even really need to show you the other one? The other trade. What was here? I'll do it quickly, very briefly. Very briefly. Yeah? So let's get rid of this now, because showed you, saved it there for you lot. Now I don't need it. It served its purpose. With this one now. Okay. So there you go. Yep. Broke through this fair value gap on this side and parked itself at a wick. Yeah, so I will consider this as a double relative equal lows. So I will consider it as that. Yeah. This is the trade that I did take. Okay, so held. Yep. Take out the fair value gap. That was below the 25%, and it is the biggest fair value gap. Took. Yeah, parked itself here, but then look, still relative equal lows. Some people could be scared about this, but I have faith in the strategy and understanding that this leg didn't do much. So came here, took out here, parked itself, but made a relative equal low, came back, got in here, rolled it down to this one. Okay, so then this trade now. Is it here? I think it just took. No, I didn't do this. Okay, yes, I remember now. Okay. Ready, go. I did take this trade. This trade did I take? I took this trade right here. This is on a 5 minute, which it didn't confirm. Yeah. So we'll take this off. And this, okay, this is where my trade was. So initially, then this is my first, and this was my second. So again, let's go calculate. So overall, it was 22.33. But then so let's go up here. So plus so that was the return. Okay. You might not like the creator of ICT concepts and all of that, but there is opportunities in the market. Yeah, clear. If you know what you're looking for, it's pretty clear. I'll tell you a loss. This is a loss. The market already went. Remember, here, it's a weekly fair value gap. The market is already done the most already. But I tried to get into it, and it wasn't successful. Took a loss. I have put in my notes to say when the market has done the most for the week, and there's a possible trade on Friday that could take place, don't take it, because it's not valid. It's just a retracement to next week. And I do see equal lows, equal highs and everything like that. And yeah, and everything like that. But I took a loss, but it's still been a good week. That loss was I put on 2 trades. Yeah. Two trades. So on this opportunity, I put on 2 trades. Yeah, 1.15, and then I took a loss of, I think, 1,600. Took a loss, but overall, I still saw and experienced and sharpened my blade of 29%. You could dislike ICT, but to me, 29% in a market where it was New Year's week and it's producing opportunities in the last week of the year of 29%, and you're not learning the strategy. To me, you're missing out. It's your business. If there's a strategy to produce so much like this, please show me. I would like to know. And just for the sake of it, like it does have clarity. Like I said, hold, take, hold. Take, hold. To me, it's simple. To me, it's clear. But each to their own. Adios.